Hey folks, today we're going to take a fresh look at trend trading and support and resistance levels. We've got a lot of beginners on our channel, so we'll pay special attention to the basics. First setup for today, check out what I found on the 5-minute time frame. Throughout today's trading day, the price has been steadily moving up with small pauses in these areas of the chart. If we take 2 or 3 of the lower points and draw a line, we'll get our trend line for today. As you can see, it's ascending, with a breakout occurring here. Let's switch to the 3-minute time frame and see what's happening in this zone where the chart consolidated. The price tried twice to continue its upward movement, but was stopped by this resistance level, from which the price was heavily pushed down. After a sharp break below the trend line, there was an equally swift return. I want to highlight another weak local resistance level that the price is currently testing. Why do I consider this level strong and the other one weak? It's all about the price's reaction to the level. Look, the price touched this level only twice and bounced off sharply each time it reached it. As for this local level, the price tests it often and the bounces are minor. After breaking through this weak level, I'm opening a long position for 19 minutes. Why go long? According to my trading strategy back to trend, after a break of the global trend, there's usually a correction in the form of consolidation, a pullback, or a pattern. In today's video, we'll analyze all these possible situations in the next trades. After breaking the resistance level, I expect the global uptrend to continue. On our chart, it looks like this. Here we have a prolonged ascending global trend. Currently, the price is in another consolidation, and I anticipate the continuation of this global trend after breaking the local resistance level. Specifically in this situation, I expect the price to reach the day's maximum values since there's a fairly strong resistance level above and there are no signs yet of it breaking. What other basic tips are you curious about? Drop a comment and I'll cover them in my next videos. A similar situation to the first trade. We see that the market is set to move upward, but again hits a strong resistance level. And the chart has formed prolonged consolidation at these high positions. Just like in the first trade, I'll be opening a long position following the global trend. But this time, the entry point is much more confident. Let's break down the situation in more detail. First off, the price is currently at the lower values of the sideways range. There's no reason for the trend to reverse into a further decline. Second, we have a strong support level. Look at how the price reacted to this level with a strong impulsive upward movement. Plus, this level halted a significant price drop. I noticed another advantage of this level on the 1-minute time frame. First, there was a dump. Then sellers were accumulating strength again in this consolidation with minimal volatility. And a second dump occurred, but they didn't have enough strength to break the level. The pullback ended exactly where the resistance area ends. I expect a second pump from this level and a return to the ascending global trend. Now, the first reaction to this level has begun. 2 green candles have appeared. This means the level is doing its job, turning the price in the opposite direction. Ideally, I expect the continuation of the global trend and new price highs, but at the very least, reaching the upper values of the sideways range. To avoid the situation where there's no quick impulse, we'll increase the expiration time so the price has time to form a new ascending local trend, at least up to the top of the consolidation, but also to avoid a second drop from this resistance level. Therefore, the ideal expiration time with this volatility will be 15 to 20 minutes. Just a quick reminder that our giveaway, where we're giving away 3 account top-ups of $250, is still going and will continue until Wednesday. So, if you've been thinking about joining our Telegram community, now's the perfect time to jump in. Here, you'll find my trading strategies, money management tips, and my trades. Don't miss out. Let's take a look at the market movement over the week. The last 3 days have shown a solid uptrend with small pullbacks, indicating strong bullish momentum. As before, I'll consider opening a long position, following the global trend. Previously, we faced a powerful resistance level that halted the previous global trend. However, this time the price successfully broke through this barrier, and now this level acts as strong support. This means the bears can't push the price lower, and the market is starting to consolidate. Below the current price, there are also several important levels that can serve as support points if the price starts to decline. So, even in the case of a small pullback, the price is likely to stop and rebound from these levels. I'm opening a trade to continue the global trend with an entry point from the lower boundary of the current consolidation. Ideally, I expect the global trend to continue. However, there's no direct confirmation for this yet, so I'm aiming at least for reaching the upper values of the sideways range. To be cautious, I'm taking extra expiration time to account for the possibility of a short-term decline. If the price does break through the current levels and goes lower, we'll have time for the price to pull back. Hit that like button if you want every one of your trades to close in profit too. Throughout the week, the market has been showing a global downtrend. However, right now, the price has entered a sideways phase and is trying to form an uptrend. We see how the price has bounced off an important support level. The long lower wicks on the candles indicate that this level is significant. Let's dive deeper into the current situation. What's happening with the price now? Are there signs of a new trend forming? We switch to the 5-minute time frame to get a better grasp of the movement logic. On this interval, we see consolidation, a period when the price is stuck in a narrow range without choosing a definite direction. When the price attempted to break through the resistance level, a reversal pattern called head and shoulders began to form. So what does this mean? The price tried to break the global resistance level, but the buyers didn't have enough strength. The first attempt is the first shoulder. It seemed like the price was breaking resistance the head, but then the market lost steam and the trend reversed. The second shoulder confirms that the bulls have run out of gas. This is the second way to trade using the back to trend strategy, where instead of consolidation, a reversal pattern forms. In a nutshell, there was a global downtrend, consolidation, an exit from consolidation as an ascending local trend, then a head and shoulders pattern. It could be any reversal pattern, reverses the trend, thus continuing the global downtrend. An ascending global trend that lasted half the week, and for the last 2 days, it's been stuck in consolidation. Let's examine this consolidation in more detail. We'll mark the global resistance level and the local ascending trend. We get a continuation pattern, the triangle. The same conditions, but this time, an ascending global trend and a continuation pattern on the 3-minute time frame. This is the last way to trade using the back to trend strategy, where the exit from consolidation is preceded by a continuation pattern in the direction of the global trend, which continues our trend. I'm opening a long position for 9 minutes because there are no levels above, and this time should be enough to catch the price rise. So, Based on all today's trades, we can draw one main conclusion. Don't trade against the global trend if there is one. This strategy perfectly shows that to increase the probability of a successful trade, you should simply go with the flow. If this video was helpful to you, hit that like button, subscribe, and share it with your friends. Stay safe and be in touch.